Hello and welcome, as it is the end of the 26th day of January 2018, and I'm going to cover one particular code, and it's Syndicate, and it's got an interesting pattern. As within this 18 average, this is a situation in which it has had looking like it might want to break out above here. I also see on here, as far as these days, over and over and over again, here, and even to a smaller degree. You don't get as many of them on the way down. There's a few here. Now these ones sort of count because they're normal, rather, but when you have moves like this that happen that take a few days, like for example going from here to here, that's profitability that's available. There's this one in here twice that this came in to hit. I'm crazy why I'm not trading this within the buy low sell high. Well, that was past tense why I wasn't. I am now, because I have put an entry position in a smire north of the 9,000 level, looking to be buying more to play for some of these gains. But it's got some interesting patterns on so many levels. That's the reason again why I'm purchasing. Let's talk about more of the technical analysis, then talk about trading strategy. At least the one I'm going to do anyway. So remove drawing tools. And I have to be careful, because if I remove all indicators, I'll remove the 18 average, and that's just annoying to put those back on. But let's show this to you on a 3-day time frame. Back in last year, 2,270-ish Satoshi, rallying up to 38,000. How you doing? That's about a 15x gain better than such. 16, 17, maybe 18, whatever. Big gain. And then, of course, it's a sharp decline. Then, August the 20th area. It has an okay rally up to the 18, sharp decline. And here, sharp decline. Now, this rally, unlike the previous 3 that I mentioned, didn't just come with like big green candles, especially this one being spectacularly large. Rather, it has been just moving its way up and down in the nice little movements, as I've shown just recently on the daily chart, but it's at this area where it first resisted such back, well, twice hit. And here, there's the comeback to just a support test. So now, the more likely it is that you test a key area, the more likely it is you take it out. And if you take out an area that has had all of these tests, now we got this gap fill, or an area that doesn't have any key resistance or support marks, there's a potential where we could redo a move something like this and see this thing go north of the 10,000 handle. And I would even think just even in the 20,000, or doubling from the break of that key psychological number, would be a conservative target. Okay then, so let's talk about this a little bit on the short term, and how I would want to trade this, or how I will be. And within the, let's do a time frame, I want to do the hour, I guess. Within this type of time frame, we see moves like, say, in this range of the 18 average. If you're able to distinguish this range, you can see that the 18 average of those is 77.13. The 18 average of highs is 8,100, about that area. So you're looking at about a 400-point move. So you could be swinging back and forth, trying to pick away at 3-4% moves if one chooses to. That's at least not for that percentage. wouldn't be my style. But even in here, at least if you're conscious of the market, okay, hourly time frame, you want to have a move always decently above the 18 average, then there's your hit right there. And just for fun, what I can do, and I just thought about this now, so I'm going to do it, is bring this back in time, and assuming one is conscious of where they are in the market and always adjusting their orders to such, this could work out to be a decent strategy. So I'm going to go back to wherever I can go. We're using the same hourly time frame. You can see all those spikes, which make it so profitable. In theory, in history, we'll see if we continue within this form. So the volatility is a lot lower at this stage when we're back in the early stages of 2017. So therefore, let's put a horizontal ray in. So you see where we are. The 18 average. And there you go. There's your hit. So I do it immediately. Here's a spot where you're like at 890. So you could buy it back at 750. But you could even just probably get this. You did. See right here. You got that hit. So now you don't have, you want to make sure you're conscious of the 18 where you want to go. Maybe you can go, okay, let's just go back to this high. And there you go again. There's another hit of that level. And there's going to be times where it may get out of place, which is why, of course, you're going to want to have sell orders for short term, intermediate term, long term. So if that's the case, that's the case. Because quite frankly, on a spot like this, if you got more orders, then right now I see the 18 average of here. I'm going to have a short term order in here close to 1700, or maybe back at this previous high. Or if I was, say, in here at 1185, I'm like, well, why don't I put one in for 1415? Oh, yeah, how you doing? See, that's why if you have extra weapons, as I look at it, as like in a poker game, more poker chips you have, the more arsenals you have at the table. Well, it's more so true in this case here. But would your buy order ever get filled again? Looks like it would here. Almost. That's another interesting part about this game. But let's continue on further again. Because I don't want to spend too much time on this. But you're aware of the market at this point. Say you have a sell order here. Like, look at the difference. 1,000 to 15. Boom, it hits. So say if you sold, well, for every 1 unit that you sold, I can try to buy it back here and get about 1.3 or so, profit both Bitcoin and SYNC in tune. And in a spot like this, that was too greedy. This would have profited at 1100. And let's just continue on doing this a little bit more. But I want to go when the volatility is a little bit better. So into, say, 2017. I mean, look at these moves in here. If you're just paying attention to this on the market, especially when you shorten this out to the 5-minute time frame. Oh, you had a sell order ready at, say, 14. I want to even go 1350. Because you're going to have often times where it's like, ooh, I could have got 15 and change. But, well, now I see at 11. If you bought that individually, ooh, you have a sell order back and it hits. Okay, I'm going to put it back in for 11 to buy. Oops, it hits. Let's put the sell order back in for 1500. Oops, it hits. Buy order back in for 11. That hits. Sell order back in for 15. It hits. Buy order back in for 11. It hits, I think. And if you're going north like 11.20, it's hitting. And I would be doing 11.20, 11.10-ish. Back to 1,500 and change. Maybe not. You'd be selling below this high here. At least I would be. So you might miss it. This is a spot where if you go 15.58 maybe. The high on this was 15.41. You might have missed it. And now all this play, when you come to about here, it's over. But a lot of opportunities are available. So let's say you wait a few days, you don't trade for a bit, you own this, and it's here. Just a random spot. Whoa, that was big. I mean, that's exactly why you want to be. But right here, perfect timing. Okay, let's have a sell order in place, just in case. I want it to be well above that 18 average. And if the 18 average falls, I would reduce this a bit. And you can see in here that this was a spot where if you weren't quite as greedy and you had your sell order in, say, even below this high, anywhere up to here, you would have capitalized on a gain. You would have realized that play that you tried to get didn't work at that time. So in here, maybe you want to just go for this gain instead. Oh, market's going down. Let's reduce this a bit. Market's going down a bit more. Let's reduce it some more. Oh, we got her. So now it had a nice little move. You might have sold it for a loss from the last time you bought it. You've been profiting so much, and quite frankly, if you're successful in your buy, it's not going to matter. What does this sold at? 25? You try to buy this back at like 19, that's a pretty decent profit. If, of course, it comes back. Oh, it did come back. And we see this market here at the 18 average. We go for a small gain here. Look at this small gain. It's at 1970 at that time frame, and you're looking to tell me that a small play is to go for 2,500, which is a 25% increase, when a larger gain would be to try to play for over 3,000 or over a 50% gain. So you could be in place, of course, you have multiple sell orders in. You have one there as well. And because you got this in longer term, maybe you should have some at like 5,000, 10,000, and so on. There's a decrease of the 18 average. It's at 1,600. You could still get away with trying to go for a 1970 sell. Maybe bring this one down as well. And in this spot, ooh, wouldn't that just sucks. If you were successful at it, then you would get it. But that's going to be part of the game, where you're going to have like so many times where you nail the tops or bottoms, depending on which one you are. Times where you're oftentimes close enough to nailing the tops and bottoms, or even spots in here where you sell at 22.75 or even like 21 change, but it's still profitable. But then you're going to have times where you barely miss as well. But in a spot like this in here, if you are paying attention to the market, one of my favorite things here is if you miss, I really have two choices with this order. If I got to move it, well, delete it or move it. And then the moving has two choices, either barely below this high, and you're going to see there why, or much higher. But if you go, okay, let's just move it down here. I wish I would have done it a little bit lower. And then you would hit that one. But if you were even going much lower on this one, you know, I probably wouldn't buy that back. However, you could have a situation where you sell this here, market comes back down to this 18, and as it's breaking out, you can get in at maybe 23.18 and still get a very tiny 3-4% gain on your last sale. But let's just throw that aside. You see this now, you put a sell order up here. And for the same can be true for buy orders too. Have like decent amounts below or above. See, there's a space. You go decently below it. Generally speaking, if you buy here, you're probably going to hit the sell order. You're buying at like 1900 or was a bit below. You sell it like 2100, you got 10%. It's there you go. It hits like quite frequently at that point. And if you think about it too, if you could hit those 10% plays like 70% of the time and settle for taking 20% losses here and there, you'll probably do pretty good still. Okay, this has been longer than I wanted to. I really wanted to talk about this code. But let's even advance this further in time actually, so we can make this further. So this is the time frame you're in the market. How often? Okay, your sell orders would be here if it was going to rally. Anytime you bought significantly below. This one here, perfect sell in here. This one here, perfect sell. This one here, it looks like it's working towards a perfect sale now. But now I'm going to remove my sell to here. And it looks like it hit. So you can buy that back immediately. At 23.49, buying back at 22 is fair. But you want to buy back below the 18 though. There it goes. And buying at 1942 much cheaper than that. So I'm going to end this video now. Just give you a good example of this kind of trading. I should be doing more of this because I'm getting too bored with Litecoin volatility being as extremely minute as it is against Bitcoin. As well as some other ones like Komodo. It's just not doing too much either, just hanging in there, which is actually pretty good. I'm going to quickly bring this up, but I got a lot of sell order signs on here. Okay, that's the Binance one. As is that one. She's just hanging in there, just doing like a little bit of nothing. But here's a situation in which it's just not selling off. And that's what I really, really like about this. Because every time it had a bull run, big red candles down. Up move, big red candles down. Up move, big red candles down. Up move, small red down, sideways correction. So a sideways correction. Now this 18 average is starting to flip over. I'm pretty confident this thing is eventually, and I think relatively soon, but just going on technical analysis, I'm just going to say eventually break above this resistance and make some nice gains going forward. Have yourself a great day. Bye-bye.